Hello there, everybody. Hope everybody is doing well. Welcome to this Blueberry Markets live stream. I'll give it a few minutes as usual before we get going. We'll go over a little bit of the data coming up, and then we'll get going from there. So, a little bit of a slower start to the week, although we've obviously seen dollar give back some of those gains that we've seen recently. We've got the bank holiday, obviously, yesterday. So we're getting sort of the first US session of the week underway now. And so we'll take a look at the sort of volumes that are potentially coming into the market. The dollar's given back some of those gains that we've seen recently, and we talked about it in our week ahead analysis video as well, that there's a little bit of potential for the dollar to come back a little bit. It's really going to depend on some of the data we've got out this week. Let me just grab a pen tool, actually. And then we can get going. Here we go. Okay, hopefully you can see that marker in there. Who've got in then? So we've got Uche. Thank you for joining. Please take a look at the yen pairs. Yeah, I will jump on the yen pairs in a little bit. Seeing a little bit of risk on tone at the moment, so yen weakening slightly. Good afternoon, Vincent. I'm doing really well, thank you. Hope you are doing well too. Thank you for joining once again. Really appreciate it. If you could leave the stream a like, that would be really, really helpful to me as well. So if you can leave a like as well, if you enjoy the stream, then yeah, we'll get going. So the important data is coming up this week. It's definitely this core PPI data and CPI data that we're going to have out. There's a lot of sort of forecasts suggesting that we could see this number coming in lower than previous. So on the previous side of things, from PPI on a month-on-month point of view, last time was 0.7%. It's expected to come in at 0.3%. So forecast showing that there could be a decline here. I think any upside risk to the dollar at the moment is an upside miss on this number. If we see anything above that forecast, anywhere near the previous spot 7%, will cause that little bit of dollar to strengthen again. We've also got the FOMC meeting minutes coming up as well. We don't know how how hawkish the tone could be from the Fed behind the scenes. So the FOMC meeting minutes will be something. We have got quite a few Fed member speeches today as well. Member Waller speaking today, tomorrow, and we've got Harker speaking towards the end of the week as well. So lots of sort of Fed sort of speeches going on, lots of dollar data coming up, and obviously the dollar is at a really interesting point. If I just bring in, let's just go to this layout here, bring in the chart, we can see that the US dollar index came up into that area of resistance that we'd been talking about for a little while. I was looking more towards the highs of the 108, to be honest. I was expecting a test at the 108s. That still may happen depending on if the data comes out better than expected coming into this week. We may still see that dollar strength obviously continue. We came up into this zone though, and we've started to see a little bit of give back of these gains. Obviously, we've been bullish for about 10 weeks now. So that's the first bearish week for 10 weeks. So I am expecting a little bit of a relief to the rally. Always try and look where price could potentially go to from a technical analysis point of view. That can be previous structure points, like this area in here, which is around about the 104.50, these highs through there. So I'm expecting maybe a little bit of a pullback into this area. We've also got the 105 spot 50 highs as well. I preferred the 104.50s because that's a little bit more recent where price has rejected there. So I can definitely see that being an area where the dollar index may want to head towards. But I'm also looking at the lower time frames. This morning, we saw price start to kind of hold around about the 106 handle. It's now trading sort of through the 106, but still relatively holding there at the moment. But yeah, basically, I'm watching to see how price reacts. We've got this low down here, which could be quite interesting as well. Around about the 105.68. You know, if price came into that low there could be a little bit of reaction in price. But you can see how after having that sort of bearish weekly close, the lower time frames are demonstrating downward trends. Now you've got those lower lows, lower highs. You know, can this potentially reach back down into this kind of key area through that sort of 105.50 and above? So there's definitely some downside pressure coming here at the moment. That may just be leading into sort of that PMI data, PPI data and CPI data. So, you know, we may get that sort of bearish move into those events. And then once those events are announced, we might get a little bit of bullishness depending on the result. But like I said, it'd be interesting to see those. A lot of dollar data recently has been fairly good. So there may be a little bit of a move there. NFP reports last week were really interesting, weren't they? The NFP report was an increase. I think it was around about 300k jobs plus, which was a very high announcement compared to what was forecast. I think the forecast was suggesting it was sort of like 170k or below. So yeah, big jump in those jobs numbers. The unemployment rate obviously increased and moved higher. We also saw the average hourly earnings come in lower. I think it was 0.2 on the average hourly earnings. So there's a little bit of a mixed NFP report. Although there was a large increase in jobs being created, what it tells us is that the jobs that were created were at lower value. And yeah, we still had obviously an increase in that sort of unemployment rate. So it is a sort of interesting dynamic there. I guess what you could argue is the fact that if there are sort of more jobs being created, but they're at a lesser value, then there's going to be sort of less money coming into the economy anyway, because these people may not be able to sort of contribute as much in terms of taxes and things like that. So there's that sort of concept there. I still feel like the Fed is still fairly hawkish. There is still potential for the Fed to hike further. I think if I just bring in, let me just bring in a new window here. I'll just do it up here so you can still see the charts. Just going to go to the dot plot on the CME Fed Watch tool. So again, if you want to try and find this, I'll just copy this into the chat. So you'll be able to follow along with this as well. So what we have here is the sort of predictions of where we expect the target rate to be in the next meeting. So the next meeting would be November. 86.4% of market participants are expecting us to hold, and 13.6% are expecting a little bit of a rise. What we did see from the dot plot chart was the potential for it to rise slightly by about 10 basis points. So from that sort of 5.5 range up into sort of the 5.6 range, or maybe even to the 5.7s. So although the market is kind of predicting that there could still be a rate hike to come, they're only expecting it to be a slight increase. They're not expecting the 25 basis points and above, right? So there's all that to consider as well. So maybe market participants are now sort of trying to price in the fact that there's going to be this sort of pause in the markets, or potentially that we have reached that peak. So that's why we're probably seeing a little bit of downside. I think the market's going to be more data dependent than that. The Fed always kind of talk about being data dependent. So it's actually interesting to see if this CPI number coming up will either miss to the upside or not. That's what I'm kind of interested in. Is that inflation rate still on the sort of decrease in the US? From a technical perspective, we've broken last week's low. Like I said, 104.50 seems to be the level of interest from sort of the weekly time frame point of view. And if that's going to be the case, then we can probably expect sort of, euro US dollar to climb, potentially dollar yen to come back into the 149, the 150 level again. So that's going to be something really to kind of keep our eyes on. You're welcome, Bongo. Hope you are well. Let me just read this. Yanis Downtrend volatility of long-term 30 US Treasuries exceeded that of physical gold, a situation that's not occurred for 45 years. This suggests that holding gold is currently less volatile than US Treasury. So what's going to happen to the Dow Jones, for example? I'm going to be scared of, or on the contrary. That's quite a question to unpick. Let me try and read that again. So what's going to happen to the Dow Jones? That's a good question. The market at the moment is quite interesting in terms of, if we go take a look at gold as well, we're talking about gold potentially coming a little bit higher because of that sort of dollar downside, that dollar weakness in the market. You're talking about treasuries as well, talking about bond yields. Bond yields are also an interesting market to take a look at. You've got the fact that we were kind of talking about this on a monthly scale of what happened into the bond yields, and bond yields are currently trading above the 4.5% mark. I still feel bond yields could head more towards the 5%, which means that the US dollar could still increase, right? So from that kind of perspective there, if bond yields are still rallying, then there is a potential for the dollar to continue its sort of bullish phase. That's why I'm interested in more of the data coming up this week, because although we are starting to see a little bit of give back, is it something that's going to be long term, or is it going to be more short term? Now, obviously, when looking at this in terms of just a broad scale market of, well, okay, the dollar's potentially going to move to the upside, then there could be the situation where you say, okay, gold lower, a stronger dollar could also mean that stock markets will have a little bit of a bearish effect as well. So you could still look for that kind of long-term play of the sort of stock markets being a little bit more on the bearish side of things. We were looking at sort of the S&P 500 recently. I was looking for more of a move down to the 41.22s. Looking at last week's price action, we've had a bit of a reaction from, I know this isn't the Dow, but we're just talking it from the S&P. We've had that strong close on the weekly from a price action perspective. Nice, strong, bullish close. So for me, there's still potential for, a little bit of downside here, or despite that sort of bullishness in this market, I don't feel like we're seeing the sort of moves where we're going to expect a bit of a sort of higher move back into the all-time highs or anything like that. Same with the Dow, really. Everything's just kind of pointing a little bit more bearish for me than it is bullish. Should you stay out of a market? That is completely up to you. I think if something's clear, then you've always got the option of, I always say that the only thing we can really control is your risk at the end of the day. If you're going to look into something and say, I'm going to stay away from it for X amount of reason, then that's fair enough. I think if you're going to look at it from a perspective of, this is something that maybe you day trade, I don't know what type of trading style that you have, you may consider, looking at it from a point of view of, okay, well, I'm going to be looking at this at a lower risk in terms of just from trading styles. So you've got that, but then you've also got the problems globally in terms of, we've got this escalation in Israel. How is that going to affect the markets? Is the market going to see more of a risk on, risk off turn? Now, I think what we're seeing at the moment is a little bit of risk on coming back into the markets, which I thought was fairly strange coming into this week. I didn't really expect yen to be on the weak side of things. I thought that we were probably going to see a little bit more of risk off tone coming in, especially with the sort of escalation. And we haven't really had that. We've had a lot of risk on instead, which is a little bit odd, I feel. I thought we'd probably see that little bit more of a risk off play, but I don't think we're too far away from that either. We've got sort of dollar yen here, 149s at the moment, approaching 150s again. There was obviously some suspicions of intervention. If you look at this from a 4-hour perspective, we get to the highs of 150.17 all the way down to the 147.28. So there was that sort of suspicion of large volume coming in there. Is that intervention, which, probably was some kind of intervention. So, looking at dollar yen here, there could be an opportunity back up at 150. with the potential for, you know, that risk off play to come back into the markets. I think if you're going to see yen sort of weaken in the near term, then your likes of your Dow probably is going to move higher. Correlation between dollar yen and the Dow are quite strong. So if we're still seeing that sort of risk on tone, then we're probably going to see a little bit more of higher prices in the Dow market. It's just it is a tricky market at the moment, I must admit. You know, there's no real clear areas where I can say, you know, there's just so much going on. It's hard to kind of pinpoint one particular thing that's been a sort of driver. So, you know, I think this is one of those periods of time where we're having to really try to, you know, use or find something that's really a bit of an outlier at the minute. Oil could be one of those. We talked about longs at 83. That seems to be playing off quite nicely at the moment. You know, we've been looking at the potential for longs in and around that area. From a price action perspective, that's looking pretty good. Will we see $92 again? Potentially. We've got this nice little break in that sort of oil price at the moment. So I'd like to deep dive into that a little bit more. I'll probably do a separate video on oil though at the moment, because we've been pretty nailed on this oil market. We've been talking about longs down here and into the sort of 92 highs, where we talked about a bit of a rejection, and then longs again from 83. So we've been pretty spot on. That was more to do with production cuts at the time, but obviously the escalation in Israel is going to be a big factor in this. Obviously, when we saw the Ukraine situation and Russia situation, there was that initial move, wasn't there? So, you know, are we going to see something similar again? So yeah, it's an interesting market at the moment. It's hard to kind of put a finger on what's doing what. It's going to be a multitude of things. Obviously, the bond market is something that really interests me at the moment. So yeah. Yeah, I think they're pushed artificially. I can kind of agree with that. Please, what the gaps on the lower is LTF mean lower time frames? Uche. Hopefully I've got that right. Yeah. Well, are you asking what the gaps are, or what you can do with gaps, or? Yeah, Yanis, I agree. It'll be pushed to 5%, I think. You see, I've got a on the current situation, the effects on the current situation. We're probably seeing a lot of gaps due to sort of that higher volatility from different types of news events and whatnot. I haven't really noticed too many around, to be honest. If you can give me an example, I can try and take a look at it. I haven't noticed too many myself. You know, gaps usually occur more over the weekends than they do in the week, because obviously, from a brokerage point of view, we close on a Friday, where you've got the interbank that's over the weekend. WTI and gold this weekend. That would probably more to do with the news out of Israel, to be honest, more than anything. You're more likely to see gaps when you've got this type of sort of escalation going on. It was probably the same when it was the sort of invasion of Ukraine by Russia. We probably saw a lot of gaps around that time period as well. Gaps can be an interesting concept in Forex trading. There is, you know, a lot of sort of theory around gaps being filled before moving on to certain places. So if you see a gap, there is a potential for that gap to be filled in either the sort of Asia session, European session, or the US session. So I think if you're going to look into gaps specifically, you might want to look into a specific type of strategies around gaps in the market. So yeah, there's plenty out there that will do that. Right, let's go take a look at some of the stuff. Let's go take a look at euro dollar. I'm interested in a little bit of euro. We've got ECB President Lagarde speaking this week as well. Another sort of high impact event for euro. I'm looking more at euro US dollar from the dollar index perspective. Is that the US dollar going to continue to weaken, or are we going to see that sort of strength coming into the market? Now, we did get some support down here at the 1.05 handle. You can see it was support back here in January as well, 2023. Looking at it from a sort of just a price action basis alone, you can see that obviously we've got nice large wick to the downside. We've closed a little bit higher up. It's very, just the opposite of what we've seen here on the US dollar index. I'm actually watching euro dollar fairly closely. I like this daily chart at the moment. You can see I've kind of marked in a high around about 1.0615. I think a breach above that is going to be where we see the sort of US dollar index roll over, and euro dollar will probably follow or trade through that, and you've got sort of your previous highs as something as well. At the moment, we're kind of stalling around about this 1.06 handle. So again, what I don't want to get us sort of caught in is any kind of just sideways price action here. I don't really want to be caught in any of that. I want to be looking to see how price reacts to this area. Does it start pushing lower? Do we start heading towards the lows again? Or do we get a nice straight breakthrough for continuation to the upside? So euro dollar is definitely something that I'm very interested in this week. At the moment, if I go to this sort of 4-hour time frame, you can see that we're kind of rejecting that area. We haven't quite met this level that I'm looking for just yet. So I have got a sort of level marked in at 1.0575. I'm just looking to see if there's any kind of reaction around this area. We did get a reaction here earlier before the sort of early US session, you could say. Price started to rally from in there. So I'm just looking to see how price reacts. I'll get my footprint charts up if we get anywhere near there, and we can see how volumes are getting traded at that point on the futures market. But we haven't made it to that point yet, so there's nothing for me to do at this current moment in time. I'm just waiting to see if we get another retest of these sort of early US session lows. I think if we do, then there could be a little bit of a move like this maybe on euro dollar. So I'll be watching that one very, very closely. Obviously, the ECB, when do we have President Lagarde speaking? We've actually got an ECB President Lagarde speech today, earlier today. I haven't actually had a little look at any kind of news there. I was busy doing some articles. When do we see another speech? So we've got another speech there on Friday. Actually, another speech on Saturday as well. So there could be some interesting remarks there to kind of take note of. China CPI will be pretty interesting. Whether we see a little bit of a rise in CPI in China could give a little bit of a boost to the Aussie and whatnot. But yeah, Euro's an interesting market to take a look at. Let's have a little look at cable. I featured cable quite heavily this week. We've got GDP data coming out in the UK, expected to rise from -0.5% to 0.2%. So there could be a little bit of bullishness to the pound this week. On a weekly perspective, we've got a very similar outlook to what's happened on euro dollar. We took a look at some volume analysis around about the 1.2075 was a nice little volume level on the charts, and you can see that we have had quite a strong reaction from that level. So I can see cable coming up towards the 1.24 handle. We've breached this trend line sort of resistance, this bearish channel as well. I quite like the idea of 124. You can see at the moment it's very much like euro. We're just kind of struggling at these highs at the moment. So obviously sellers were active around this area previously. We've tried to come back in again, and yeah, we're just starting to reject here at the moment. So I wouldn't mind seeing a clear sort of break above 122.50, head towards that sort of 123 handle. I think that would influence a little bit of buying up towards the 124s. Let's just have a look at where those sort of volumes levels are resting on this one. Yeah, so around about the 124 handle, you can see this volume spike around that consolidation area through there. So I do quite like 124, 123.90s as well could be something to sort of look for as well. But that's the next volume pocket. If we do trade through this level, we could trade up to that 124. If we hold here, then we could see a move back towards that 121. So the market's just setting up at the moment. It's just setting up to before these events coming out. You can see actually from a news point of view, Monday, obviously we had bank holidays, Tuesday, not really got too much in the way of data. Wednesday is when it really kicks off. So I think that's where we're going to see the most sort of volume and volatility this week. Let's have a little look around then. So I actually liked the idea of a Euro Oz move. Let's just have a little look at this from a monthly perspective. So you can see that we've kind of rejected in at these highs again last month. I like the idea of potential downside here. Weekly chart, you know, we're just trading through some key levels of support at the moment. You've got this trend line resistance and support coming through, or this sort of bullish channel. Price has traded through that. We're below 166 at the minute. So I do quite like the idea of potentially seeing 164 again, potentially lower. Just had a bit of confluence to this. You can see the stochastic here is pointing to the downside as well, K below D. Obviously, it's not something that I rely on heavily, but it's just looking at confluences. What would these traders be looking at? They'll be seeing that K is below D, it's heading towards the 20. You know, they could be looking for a move down into this area, very similar to what happened here, where we got a bit of a pullback. Also here, a bit of a pullback into these sort of lows. Are we going to see a similar thing back towards these areas here? So looking for that potential. I do quite like this market from a sort of trading point of view. If we look at it from a 4-hour, you can see we're kind of trading back towards 165.50 at the moment. This is a little bit of a level on the volume profile. If I just go to the hourly, I'm just going to bring it in at the fixed range tool, go from the swing high to the swing low. You can see around this area here, actually the point of control was 165.52. That's the level I was interested in. You can see we've only dropped about 10 pips away from that area, but we're starting to see that sort of selling coming back into the market at that point. So yeah, I wouldn't mind seeing some moves around here. What I was watching for was a little bit of change in trend. So if the market can sort of start breaking these lows here, for instance, come back up, give a bit of a sort of lower high, then you know there could be some potential for Euro Oz to trade a little bit lower. So I am watching this one quite keenly. I do quite like the idea of Euro moving to the downside. Obviously, the risk tone's also kind of playing in my mind. You know, we've got that sort of risk on in the market. Yen sort of performs a little bit poorly in those markets, but we also see the Australian dollar gain a little bit of strength. You know, forward thinking as well. You know, we've got China data coming up, CPI, which is forecast to come in higher. So I'll be seeing a little bit of sort of front running on that Oz and Kiwi strength until that point, especially the Australian dollar, you know. So Euro Oz could be a little bit one to watch there. 166.25 has obviously been a really key level of resistance. Supporting levels for me are down here. We've got 164.50. That's the most recent area of rejection. So we know that there's some buying going on down in here. So that would be kind of my first area to think that buyers could come back in again. Or, you know, we've got 164 and even 163.25, which I think is quite a large level of support. So we could see these kind of levels being tested. We can see 166, 166.25 has been rejected quite a lot recently. So, you know, to see those kind of buyers give up here and price push lower is quite interesting. So I'll be watching that one, to be honest. I've got that one on my watch list for a potential opportunity. Yen pairs in general, though, if you look at Aussie yen, we're starting to climb. I was actually sort of bearish this market. Price came up into the sort of 94.60 area. I tried to get short here. I got stopped out on this one. The reason why I tried to get short, you know, if I just bring in the volume levels, obviously we had that sort of downward move coming in. I mean, you can see the point of control was around about that 94.62. So I was basically trying to play that level. You know, every time we kind of came into it, I looked for a little bit of a short. So I was short in here, took some profits, went short again as price tried to sort of fail above this area here, closed back below. And then obviously, you know, we moved higher and we didn't really get that risk off tone, which what I was sort of expecting after seeing that sort of intervention move. And we started to climb higher again now. And, you know, it looks to me like we're probably going to come back into this 95.80. Anything above that, you know, you've got 96.50s, 97s, 97.60 above that. So whether price actually gets there or not is a different thing. But, you know, because we are technically trading within this range, aren't we, on Aussie yen? So there's a potential for it to come back to the higher of the range, head back towards the lower of the range. It's just that when that intervention came in, we obviously came down into that range low quite quickly. So I was expecting sort of another test of it before seeing any kind of move. And yeah, instead price flushed higher. So unfortunately for me there, I got taken out of that one. But I'll be, again, kind of keeping a close eye on it. Kiwi yen's probably one to watch at the minute. You've got Kiwi as a stronger currency, yen as a weaker one. The only thing I don't like here is look at that daily chart. You know, we're coming back up into that sort of 90 area. We've rejected here previously back at the end of September, start of October. So yeah, don't really want to get long here. You know, much rather be long down towards this 87 area where we've seen buyers stepping in quite frequently. But yeah, nothing really there for me at the moment on Kiwi yen. Although, you know, looking at it from sort of monthly perspective, technically we are still bullish this market. You know, you got the high 92, potentially 94. This would be a really interesting level, I think. Anywhere into that 94 level would be really interesting. It kind of makes me think that the yen's still got a little bit of a way to go. Now, when we have had interventions in the past, let me just go on to the daily chart. Price can still extend. You know, we did get an intervention here, okay, sort of an initial intervention, and then price rallied to the upside. You've then got that sort of secondary intervention in here where we did get the move. So it wouldn't be sort of out the realm for dollar yen to surpass 150, maybe even into the 152s before we saw any kind of signs of intervention again, where that 145 could be a sort of move to watch out for. So yeah, dollar yen, very, very interesting market. It's just a little bit slow coming into the first couple of days, just because I think we haven't got that high impact data. Obviously, first US session this week has just come into play. So yeah, we haven't really seen too much in the way of kind of large moves at the moment. Let's go take a look at gold. We featured gold yesterday. Basically, this bounce off the 1815 level, you know, 1875 looks to be the next sort of level of interest. You know, we could be just seeing a little bit of a boost here because of that dollar strength in the market. I did try and take a look at the COT reports as well. COT reports are showing that there is a little bit of buying going on the commercial side of things, but nothing that's, I'd say, extreme, you know. Nothing in the way of extreme at all from the commercials. If I just go, let's have a little look actually. Let's take this chart up here a second. We'll go have a little look at the COT reports. Now, these are just free COT reports, right? So if you do want to have a little look at these yourselves, you can jump in there. Sorry, I've missed some questions here. Right, they're commenting there. Please explain it with gold. Yeah, so you probably would have seen a gap in gold prices this Monday because of that news over the weekend. High volatility news like that would always probably incur a gap. That's why it's probably best if you are trying to hold something over a weekend that you're in a relatively good position already before you try and hold anything into a weekend. Scam broker, okay, if that's your opinion, then that's your opinion. You can leave. There's nobody asking you to be here. Right, guy. Hi, John. Hope you're doing well. I have a question for you. When the CPI or NFP news is released, how much time are you allowed to pass before you jump into the markets? That's a really good question. If it's NFP, I probably don't jump back in. To be honest, I think NFP is a really difficult sort of thing to trade, especially if you kind of take into context what happened this week. It wasn't sort of any sort of report that gives you a guarantee of what's going to happen. You obviously had the increase in jobs, but you had the increase in unemployment and the decrease in average hourly earnings. So I think if somebody sees that, they're thinking, okay, well, what they'll focus on is the big number, right? So if I just go into the news and we go back to last week, a lot of people are going to be focused in on this 336 number, right? They're going to be thinking that's a buy, yeah, but they don't really take into consideration the average hourly earnings on the unemployment rate. So they'd probably just go straight into buying the US dollar, which would have worked out originally within the first couple of minutes. But if you look to trade that on the rest of the session, you would have been absolutely destroyed because we did see that turnaround in the dollar after the fact. So on NFP days, I tend to stay away from the markets, to be honest. I don't think it's necessarily an event that I want to trade until the Monday. So we'll see how the market digests it and where we can see anything then. CPI data and other things like that, I'll probably give it about an hour or so. A lot of the times the data drops either come early in a session or they come in just before a session. So, for instance, you can see here the core CPI and the PPI this week's coming in at 1:30 p.m. So 2:30 for me is the sort of New York Open. So that's like an hour before. So we usually see a little bit of reaction and then the US session fully comes in and then you can kind of gauge what's going on from that point of view at that point. It obviously depends what you trade as well. If you don't trade anything US related, then obviously it may not sort of matter. But if you do trade anything US related, then yeah, I would give it at least an hour afterwards before jumping into anything. But that's a good question. Just taking a quick look at the futures on gold. Where is the? I think I bought the wrong chart, to be honest. Let me go up and have a quick look. COT reports. Gold. Go to cut chart. So this is the one I was looking at earlier. Just looking at, let's get rid of these. Let's look at the legacy. So the red are the commercials, green are the non-commercials. Non-commercials tend to follow price. Commercials go against it. Now, obviously, if prices of gold is falling, then you're going to get the commercials trying to buy more and more of it, right? Because they see it as cheap and they're almost the ones doing business in general. So they're going to look at it as a sort of, if gold is falling, they want to buy it more. What I like to look at is when it gets to extreme levels. So what I mean by that, when I say extreme, you can see this sort of area in here. That was around about sort of minus 53,000 there on this particular instrument. Now, you can see how that relates to what happened with price after the fact, right? Price has then started to move to the upside. So we're not really at those levels yet. So that tells me that there's probably still a little bit more downside to gold to potentially come. But obviously, it doesn't mean it can't move higher either. These are weekly charts. So, you can have a couple of weeks, maybe price returning back towards 1900. Do we get a bit of a sell-off after the fact? But I like to see it when we get to sort of these types of extremes. So that's what I'll be kind of alerting myself to. Can we see price come up into that sort of minus 50,000 level? Then I'll start thinking to myself, okay, this is probably a really, really good time to start looking at gold prices and how they could potentially move higher. We don't really have that at the moment. So, although I do think that there's sort of good demand levels around this 1800 area, it doesn't mean that price isn't going to trade through it or potentially move towards 1600. I think if we get anywhere near, obviously, the 1600 lows, then I do think, obviously, there's probably some good sort of opportunities around that area there. But looking at the Commitment of Traders report, I didn't really show it in my analysis yesterday because I didn't think it was anything that was, really to alarm you with just yet or to alert you to just yet. So I just wanted to bring that up. Any BTC, some ideas about Bitcoin? I haven't really looked at Bitcoin for a while, to be honest. I don't really look too much into cryptos. I used to be heavy into the cryptocurrency markets, but I don't really see too much going on with them at the moment. I think there needs to be some kind of regulation, and I know that might go against everything that crypto stands for, but I think if it had regulation, the market would, Bitcoin prices would probably absolutely fly. So there's that sort of element to it as well. But yeah, but we could have a little look at Bitcoin. I'll just see if my chart will load here. It's just going a little bit slow at the moment. Here we go. So Bitcoin prices haven't really changed, have they? The past few weeks, they've been pretty much in the same place. Whenever we kind of talk about them, they're sort of within this range here. You let me know what you guys think of Bitcoin, cryptos. Do you trade them? What ones do you trade? I used to be very much into sort of Ethereum, BAT, all of those type of currencies. But yeah, but you can see we're just kind of trading within this range at the moment. We're kind of floating between $25,000, $30,000. We haven't really moved away from that yet. Obviously, a break of either side would be quite interesting, just from a sort of trading point of view. A break below 2,500, would we see 1640s again? I haven't really looked too much into sort of the mining pools lately either. But I imagine with prices being where they are, the mining pools are just kind of holding at the moment rather than flushing into the market. But yeah, it'd be very interesting. Obviously, we've had, the things going on with FTX. We also had, I don't know if anybody was into BlockFi, but BlockFi just gone under, haven't they? Although there's potential for them to get their money back. I know there's sort of suing FTX. So, there's lots of different things going on in that element, but whether that's big enough to shake any of the prices here, I wouldn't know. I'm not into Bitcoin the way I used to be. How do you get CL on that chart? Sorry, I've just actually got rid of it. Let me just go back to it and I will grab you that chart of interest. So if you go to, I'll just type in Commitment of Trader reports or COT reports. Obviously, you can get your COT reports free every week. If you just go into the Chicago Board of Exchange, you can actually download them. The problem is it is a hefty spreadsheet. So I go to this. Let me just copy that and paste that into the. If you go to that website there, you should see something like this. So you got all the reports here that you can choose from. You got futures as well. So you can check out your currencies. You know, if you have a little look at US dollar index at the moment, you can have a little look at where people are positioned. Kind of gives you a little bit of breakdown down here as well. I don't really bother with the sort of financial traders report. Just kind of focus on the COTLC ones. But you can see here, non-commercials, who are the large speculators, getting long dollar still at the moment. So yeah, very interesting information you can have a little look at. About the dot plot, the next interest rate, CME Fed Watch bond yields. What do you think? It's hard, isn't it? I think bond yields, especially the 10-year, I like the idea of them reaching 5%. I just, with regards to sort of dollar data at the moment, you know, seeing that jump in the NFP was quite surprising. I wouldn't be surprised if we saw a jump in these numbers either, and I think that's going to put a lot of pressure on the Fed again. The dot plot's interesting because it's showing just more of like a 10 sort of basis point move rather than sort of a 25 basis point move. So I think even if the Fed were to hike again, they're not sort of expected to hike aggressively anymore. So it does say that we kind of are near the ceiling of those rates at this moment. I mean, we could have a situation again like what happened in the 70s, 80s, where we saw sort of that inflation peak come down, and then, you know, we saw a very interesting sort of rally again. Let me just bring up that chart as well. Let's see if I can find it here. We go countries, United States. We go to the inflation rate, and we go. See if I can max out the chart there. So let me see if I can bring this down as well. So this is just the inflation rate. This was back in sort of the 70s, where we had that sort of initial rally on the inflation rate. Then we also saw the sort of same situation there with interest rates. Though they eventually brought interest rates up, didn't they? So it could almost cause a recession to try and bring those inflation rates down. But we saw a decline, and then sort of the inflation rate got out of control again, and then that's when they obviously went a little bit more aggressive. So it's definitely interesting to see, you know, is history going to repeat itself, or are we going to see this actually have an effect? I know it's different times now, but how often do we, see history repeat itself in the markets? And it just may be different sort of catalysts that are kind of causing that sort of move. What was interesting, what I saw on Twitter the other day or last week was, if I just go into housing here. I can find it. So you obviously got the mortgage rate, 7.53%. You got the 15-year and the 30-year mortgage rate, which are higher as well. Mortgage applications down to -6, which I thought was very interesting. Let me just let me just show you that on a line, and let's go sort of. Don't need to go that far. Probably just a year or so. So mortgage applications have gone down quite a bit. Obviously, that's to be expected. You know, with the rising of interest rates, people don't really want to move, do they? They don't want to go into new sort of mortgages. There was a chart. I'll try and find it. If I can find it for next sort of live stream, I will. But it was just basically showing you the sort of applications, or, you know, the mortgage rates in the US, where it should be at, but people aren't really applying because they've got 15 to 30 year mortgages. And so those people in particular are not really being affected by the larger interest rates. So there's still a surplus of sort of money around. Let me just try and see if I can find it on here. I did think I found it once. Was it the refinance index? It might have been. So you can see the refinancing index here is very, very low, right? And these people back in 2020, there was a very sudden rise in the remortgage rate, right? So if people are remortgaging in 2020, they're not going to feel the effect of the recent climbing in interest rates, you know, especially if they're into 15 to 30 year mortgages. So those people in particular, you know, are not really going to suffer too much from the interest rate hikes, which was just an interesting concept. I thought, well, if they've got surplus in money, then are we still going to see that spending in the economy and things like that? So that's an interesting concept. That's why I think maybe we'll see a move higher still, and I still think those CPI figures still could be quite high, and that's what I'm kind of waiting for. Are we seeing a little bit of a push down in the US dollar at the moment, because, you know, these numbers here, which are expected to fall, maybe not core, but you sort of CPI month on month expected to fall. If we see any kind of rises there, I think it's going to be, you know, bond yields are going to rise, dollar will likely rise as well. So I'm just cautious in and around these areas at the moment, although it does look like we're getting a little bit of a continuation of a move here on the US dollar for now. About the IR, because I have a 5.75% interest rate, it's better. NFP show a good work market. Yeah, so the labour market's been a talking point, hasn't it? Wages have been a big talking point as well. Seeing the average hourly wages fall was probably something that the Fed, you know, would likely want to see. You know, the expectation on the labour market was they wanted to see sort of labour market, you know, loosening a little bit. Haven't really seen that. I think we had, was it the prior month, which was a little bit down. We've seen a bit of a boost. That even got revised up to 277 as well. So from a jobs creation point of view, there's still obviously being jobs created in the US at the moment. That would obviously cause an issue in terms of inflation, wouldn't it? So there is an element to that. And this is why I think these news events coming up are going to be very, very crucial, and why I'm kind of not putting all my sort of eggs in one basket, saying that the dollar, you know, we could easily say here, dollar's turned bearish. You know, we've got the weekly chart here from a I'd say a technical point of view. We could easily start saying, yep, the dollar's bearish now. We've broken through these areas and whatnot. From a fundamental perspective, you know, are we seeing the sort of true picture there at the moment? You know, that's my kind of the little thought in the back of my head. Please, Aussie Kiwi, I mean a buy trade, okay. Do you want to tell me what buy trade you're in, so your entry criteria to that? I know Aussie's been a little bit stronger lately. I've got the 1.06 area marked out, which were the lows back in May 23. Aussie Kiwi is not a chart I particularly trade. Two currencies can move fairly similar. I know that there are times where this market does trend pretty well, but yeah, you're in a buy trade. Everything's pointing to the downside at this moment, I would say. In terms of trend, you know, the market's a little bit down. We've come up into this area here, previous structure points. We're starting to see a bit of bearishness. I like 1.06 because it's those weekly lows. And if I was to be a buyer of a market. I want to be buying markets at lows and selling at highs. The old saying goes. But it does ring true. So I would prefer to be in and around this area down through here long, rather than where I don't know where you're long, obviously. But if I was to be long here, I'd be a little bit cautious. On the other hand, if we were to see sort of new highs being formed, then yeah, I think you'd be a lot more confident to look for those longs, try and target these highs. I just like 1.06 because it's those weekly lows there. Again, always ask yourself the question, why do you want to be in this market? Is there a reason why you want to be Aussie Kiwi long? Have you seen something fundamentally? Have you seen something strength and weakness to say that you want to be in this market long? And if so, is it just a technical reason? I think if it's just a technical reason, then you may want to have a little look into some fundamental reasons to try and back your case. 1064 is your long, which is here. Okay, so you're in a little bit of profit at the moment. Let's look at the hourly. I can definitely see price try and revisit in these highs. Whether we stay, bullish above that high is something we're going to have to watch when price comes into it, or you're going to have to watch when price comes into it. Otherwise, you could see another move back down towards this level. I don't see anything at the moment that would make me want to be a buyer. That's just my opinion, though. I may be wrong. Right, guys, we've been running for nearly an hour now, so I'm going to leave it there. Thank you for joining me on this one. This one's gone really quick, actually. Thank you for all your comments and questions. Some really good questions in there. Thanks for 𝖢𝖣yianis. Some really, really interesting questions as well. Some of those I'm going to have to think about in a little bit more depth, to be honest. I will revisit those. Some good video ideas, to be honest. Vincent, thank you for joining me. 𝖢𝖥𝖣yi, thank you for your comments and questions as well. And Bongo, I can see you in the chat, so thank you as well. Thank you for joining me as usual, and I will catch you on Thursday.